Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. He tells us small caps are leading the charge. While commodities are doing well, the Canadian dollar has taken an unexpected hit. Longtime BC investor and trader Victor Adair dusts off his crystal ball to take a look at gold, the Russell 2000, the U.S. and Canadian dollars heading into the new year. Author of The Money Bubble, John Rubino from dollarcollapse.com, gives us his view on stagflation, currencies, the Dow topping 30,000, and the positive outlook for junior gold miners. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at ChartsByRoss. Welcome back to the show, Ross, and best of the season.
Best of the season to you and each one of the listeners out there.
Ross, small caps still charging along?
We've been talking about this one pretty much since the election. This is the winning group, and there's been some others doing pretty well. You look at biotech, which you'd expect after what's going on with COVID, et cetera. But these small caps, the Russell 2000 index hit a new all-time high. Didn't quite close there on Friday, but managed to eke out a new high for the move. So this is what you expect to see this time of year, but we've got some little red flags out here. The index is up about just over 100% since the March low. Pretty big run. And when we look back historically, last 40 years, there's 10 times that we've seen it have a move where it was up 85% or more from a key low, and in this case, that's the March low. And in every circumstance, the market then rolled over and corrected back to its 20-month moving average. So, in terms of timing, we look at from a price perspective, at least we're there now. From a timing perspective, we like to, once again, go back to our DeMark work with the sequentials. And when you get 9 consecutive weeks, closing above 4 weeks earlier, and we are week number 7 as of now, once you get to that 9th week, the probability of a turn really increases dramatically, especially when you've had this kind of a move. And then from a timing perspective, you want to look for the rollover. You don't want to try and pick the top. But things such as an RSI or a MACD become very, very good at doing the timing when we look back at these previous bouts as far as the index is concerned. So somewhere it would appear in the first month or so of 2021, we were looking for a pretty good sell signal as far as the small caps are concerned. And because they've been the leader in here right now, that means we probably see a correction across the board. And in terms of prices, that 20-month moving average is a fair amount underneath us right now. So it'll be a reasonable short-term trade, at least for people who like to trade the bearish ETFs, the inverse ETFs. They could use the RWM. Or any of the option trades that are out there. You could be a buyer of puts or a seller of calls. But I think it's going to be an interesting stretch once we get through this favorable period and the Santa Claus rally.
Does it look like the Canadian dollar blocked a rising slap shot with its crotch?
It would appear so. And at this point, we had a great week as far as commodities were concerned. You got the oil market got up to $49. The CRB index made a new high for this run off the low. The agriculturals doing exceptionally well, but our currency, the Canadian dollar, finished off the week poorly. And anytime we start to see divergences such as this, it's a big red flag as far as the dollar is concerned. So wouldn't be at all surprised at this point to see a pretty decent correction. It's been we had a 3.5 cent run off the November low right there at around the election, the U.S. election. So a correction here would be entirely feasible, and especially when we look over at the U.S. dollar index, which had an absolutely terrible week into Thursday at least, bit of a reversal here on Friday. But U.S. dollar is getting close to some capitulation numbers for us, and that would be then a setup for a bounce in the U.S. dollar, and inversely the correction in the Canadian dollar.
What's going on with gold?
Well, so with the dollar index having fallen as much as it did this week, we got some real life in the gold and silver markets. We had been looking for the seasonal to start on the upside soon. It actually came in a little bit ahead of what we were thinking about, but there's a good pop for both gold and silver this week. The up to what would be first resistance levels, the silver for the since we topped out at the end of the summer, we've been looking at a 61% retracement level as resistance for the silver market. That's around 28.90. Also been looking at one of our technical bands, the Keltner band, and it's got resistance at 28.90. Today we saw the silver market come up within about $1 or so of those resistance levels. So would expect to see a pause in here, but the favorable period for precious metals is really quite good when you look back at it. Historically, January into February is a time that you want to be on the long side. As always, it's just a seasonal tendency. There's no guarantees. So make sure that you don't risk too much on the trade, but, have enough to make it worthwhile.
How are things going with the agriculturals?
Yeah, it's been an exceptionally good stretch. We had been looking for the agricultural index to bottom out May, June. Got a nice turn there. If we look at things like soybeans, they're trading around 8.25 a bushel. Here we are at over $12 to finish off the this last week or so, and no, that's the best level we've seen in beans until we go back to maybe 2013 or 2012. So a weak currency and some inflationary pressures over the ag side. It's going to be interesting to see what happens with inflation. For maybe there's going to be a bit of a surprise when we look down the road 6 or 12 months from now, because it does take a while for everything to feed through as far as ag prices are concerned. And, here in Canada, if they're going to tack on this carbon tax, it's going to make everything more expensive. Doesn't matter whether it's food or products, anything's got to be shipped by truck or rail, or you've got to send the tractors out to harvest. It's just going to do nothing but add to prices.
As Paul Landry from the BC Trucking Association said, everything in your house was in a truck at one time.
Yep.
Yeah.
Very much so.
Ross, the best to you and your family?
The best to you as well, and we will be back with you, I guess, just before Christmas.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at ChartsByRoss. Coming up, Victor Adair, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Victor Adair, just retired from nearly 50 years of being in the brokerage business in BC. He was one of the co-founders of the Polar Futures Group, so he knows what he's talking about. Victor, this is our last interview of the year, and if we said this was an extraordinary year, I don't think we'd be lying. The spread of the virus around the world has been incredible. The financial response from governments and central banks has been unprecedented. Millions of job losses, business failures, lockdowns, thousands of deaths attributed to this virus. Now people are just starting to get vaccinations. Stock markets are at all-time highs in February. Then they plunged in March, right on my wedding anniversary. But they've rebounded in huge numbers. Now, November, apparently one of the best Novembers ever. What are your thoughts on the stock markets here, and what do you think what happens as we go into the new year?
Well, you really got carried away there, Jim.
Well,
Okay, so we're talking on Friday. It is what we call quad witching day. So 4 times a year on the quarter we have a whole lot of options expiring and things like that. The quad witching today is especially significant because we're having Tesla will be added to the S&P 500 share index after the close today. And just to make it simple, the people that manage money and mirror either purposefully or discreetly, the S&P 500 index, need to have Tesla on their books. So they have to buy Tesla, which probably means they have to sell some other stocks to make room for Tesla on their customer accounts and so on. So there'd be lots and lots of churning in the market here today for no other reason than to, the fact that we've got all the options expiring and we've got Tesla being included into the index. But let's say that's just short-term noise, and it may be very loud, but it's relatively short-term. We've had the benchmark Dow Jones Industrial Average rally more than 4,000 points just since the end of October. I was writing another essay earlier this week, and I noted that the Dow Jones was about 825. As opposed to 30,000, where it is now, back in 1981 when interest rates peaked in September of that year. We've had, since 1981, interest rates have had this 35-year bull market. Bonds have gone up, interest rates have gone down. But it's not a surprise, really, that interest rates falling, it's kind of gone hand in hand with this incredible stock market that we've had over the past 40 or so years. So here we are, the Dow Jones up 4,000 points. That's worth almost 5 times as much as the whole index was worth back in 1881. And a big part of the rally here the last 6 weeks, obviously, was the vaccines. I mean, we got into that hole back in March when people were panicking over what the virus was all about. The central banks and this time the governments with fiscal came to the rescue, as it were, and we've had this tremendous rally off of the March lows, with, for instance, just as recently as this week, the head of the Federal Reserve basically saying we are going to keep the pedal to the metal here until we get this thing fixed. So there's been this flood of money come into the world, just printed up on an electronic printing press, as it were, and it had to go somewhere, and it's really gone into stocks. And when a market is on a trend the way it has been, a lot of folks that are either just trading their own money or, God help them, people who are managing other people's money, if they're falling behind at all, they've got to jump in and buy stocks. So there's been this psychological aspect, I think, to the market, certainly over the past few months and accelerated here the last 6 weeks. Like, you got to be in. I mean, there's just no place else to be. You've got to be into the market. And, that doesn't mean it's going to, you can kind of hear that I'm a little skeptical, but that I'm going to say that doesn't mean the market's got a top here. I mean, it could double from here for all I know. I mean, the market, if you look at a 40-year chart, it's pretty scary, the sort of parabolic trajectory we're on here. But, low interest rates means that a lot of people that probably should be savers, tucking their money into GICs and that sort of thing, have decided to become traders. I mean, millions of people, especially this year, flooding into the market. People that weren't going to work or were working from home decided to have a part-time job becoming professional stock speculators, So we've got this overall attitude of it's risk on, you can't go wrong. And that attitude not only shows up in the stock market, shows up in the currency markets, interest rate markets. We have massive call option buying. We've seen the speculation certainly in initial public offerings and these SPACs, these special purpose acquisition corporations. In some respects, I think it's kind of a goofy phase here. We have a lot of internal rotation in the market. For instance, most everybody knows that, the stock markets in the United States represent way more than half of total world stock markets, and there's probably a handful or a few more of the big tech stocks that account for a big part of the market capitalization and have certainly been the lightning rod for drawing capital to the stock market. In the last 6 weeks or so, we've seen some of the big cap tech stocks are still trading below where they were at the beginning of September, something I've called a few times a key turn date. Apple in particular, you can see that. It had that great run to the beginning of September and has fallen back from there. But what has happened is like the Russell 2000 index is up about 30% since the end of October. So some of the forgotten smaller stocks, the ones that weren't as glamorous, say, as the high flyers, they're catching up to the other markets here. There's a lot going on. I'm a little skeptical. I wouldn't have every last cent invested in the market here, but at the same time, it's tricky to be short. So I'm mostly watching the stock market, and if I do trade it, I'm trading it from the short side, but I'm being very careful with that. And you ask me what I think. That's kind of a long-winded way of telling you what I think about the stocks right here.
Interest rates are now at their lowest levels in recorded history. You can get a 10-year mortgage for below 2%. Whoever thought that would happen? Governments around the planet have issued trillions of dollars in debt. Many of them in Asia and Europe, putting them into negative yield bonds, something like 18 trillion worth. You get the bond today and you get less money 10 years from now. The Federal Reserve has more or less promised they're going to keep interest rates ultra low for the next few years. What do you think is going to happen with interest rates?
Well, I think the Fed is going to do exactly that. They are going to keep, as I said earlier, the pedal to the metal. They're going to keep interest rates really low. That's kind of the only tool, I shouldn't say the only tool, but that's the major tool that they have. Again, the head of the Federal Reserve at the regular scheduled meeting this week once again said to the governments, we need fiscal stimulus, like we can't do this all by ourselves. But, in a lot of ways, like the bond market is broken. What was it? Tom Wolfe and the Bonfire of the Vanities back in the 1980s, where, the bond market vigilantes, the guys on the desk at Solomon Brothers and so on, policed the credit markets. If the government was issuing too much debt, there's too much inflation, these guys would sell bonds and push interest rates higher. Well, the the bond market vigilantes have been neutered. You know, they're just not there anymore. You've got $18 trillion worth of negative yield. I mean, the only reason you've got that is because people are front-running central bank purchases. I mean, nobody in his right mind is going to buy a bond where you have to pay the people to basically hold your money for you. But you'll buy that bond if you think you can turn around and flip it out next week to the central bank because they're buying bonds like there's no tomorrow. Europe and Japan is where the negative interest rates are. They are just like the Fed in terms of they want to keep interest rates low to try to stimulate their economies. Japan is slipping into deflation again, or still. I mean, it's been a 20-some year journey for those folks. The Fed keeps saying that they want to see inflation, whatever that is these days, above 2%, and they would tolerate it actually maybe going to 3 or 4% so long as it kind of averaged 2%. I mean, they're doing whatever they can in a way to push people to spend their money. You know, locally here in Canada, our finance minister is puzzled as to how come people are leaving money in the banks and they're not spending it, and they want to come up with some scheme to get people to spend that money to stimulate the economy. Certainly, in my thinking, one of the ways they might stimulate people to spend their money might be to run a better ship down in Ottawa, but that's off topic. People are reaching for yield because, as I said earlier, people that should have been savers have decided to become traders because you get nothing to have your money in a GIC or a bank account. And I think, you know, there's risks that go with that. But your question was what happens to interest rates? Interest rates probably stay low because the central banks can just buy it all. You know, if the governments have to issue debt to pay for their programs, and then I almost choke saying that because the modern monetary theory would say that governments don't have to pay for their programs. We're in a kind of a crazy upside down world in a lot of ways, Jim, and sometimes I wonder if some of the experience that I've had over the things that I've learned, say, over the past 40 years are actually a detriment to trying to understand the markets now. It's like they're speaking a different language with negative interest rates and so on. But I keep going back to psychology, and whether you go back to the tulip bulb mania or any number of manias and that sort of thing that we've had over the years, human psychology seems to be pretty consistent. When a market is running crazily away to the upside, people do bizarre things that they later regret. So, interest rates will probably stay low, and you know, we're sort of on automatic pilot as far as interest rates are concerned.
Yeah, people can be sheep. It's like the old Russia. People would see a lineup and they get in the lineup and they say, "What's it for?" Doesn't matter. It's probably in short supply, and I'm glad to get it. The U.S. dollar index fell to a new 2.5-year low this week, down more than 12% from its highs in March. Lots of forecasters predict the U.S. dollar will fall further in the new year. What do you think?
Yeah, you know, I've been on the wrong side of that, I guess, and you know, when we've done some of these shows before and we asked me about trading, I think one of the fundamental things about trading is to say is to understand what you're going to do when you're wrong. And you know, I think a lot of folks that are maybe new to the trading here, and if somebody told me a story the other day about a receptionist who said, "Oh, it's easy to make money. I just buy Tesla in the morning and sell it in the afternoon." And I thought, boy, does that ever sound like a disaster waiting to happen. But I guess where I'm going with that is I thought the U.S. dollar would not make the lows that it's made here the past couple of weeks. I thought that the same kind of thinking that is inspiring people to, you know, buy Tesla in the morning and sell in the afternoon, that same kind of thinking is going on with the U.S. dollar. You know, you buy the euro in the morning and sell it in the afternoon, and you make money. You buy the Australian dollar or what have you. The U.S. dollar has been weak against all currencies. Some of the more academic boys might say, well, the U.S. used to have a huge interest rate advantage over some other countries, and with what the central banks have done, pushing interest rates right to zero, that advantage is not there. A lot of money that came into the United States has done well, but now it's leaving to go find opportunities in other places. The American stock market has hugely outperformed the rest of the world. Maybe you ought to take some money off the table from the States and go and put it elsewhere. And certainly one of the places, by the way, that looks really cheap relative to the U.S. market is the United Kingdom. And I guess with Brexit hanging over the market, that's one of the reasons it looks like it's on sale over there compared to the American market. I'm a little from Missouri when I see the extreme bearishness on the U.S. dollar, but I've traded currencies probably more than anything else over the past 45 years or so, and the thing that does stick in my mind, so many times I've seen trends in the currency markets just go way further than I thought they would, and then keep going. So and currencies do kind of develop a self-reinforcing trend, I think more than other markets. So the U.S. dollar is weak. If I am a little bullish on the U.S. dollar, I will sit on my hands and wait until the market shows me that it's turning around, rather than trying to say, this is my position and I'm going to stick to it. I remember having a German client back in let's say about 1983, and Ronald Reagan was the president then. The U.S. dollar was on this incredible run to the upside. The Deutschmark was just falling like a stone every day. This guy couldn't believe what was happening to his beloved Deutsche Mark, and he kept buying the Deutschmark in those days and losing money. And finally, I guess toward the end of 1984, he had just lost all the money that he had to do the speculation with and had to leave. And that was probably 2 days before the U.S. dollar turned and started to fall, and the Deutschmark, skyrocketed to the upside. So, like I said earlier, what are you going to do when you're wrong? I've been not bullish. Not bearish on the U.S. dollar. I missed making money. I miss making money a lot of the time. I'm more inclined here to wait for an opportunity to be a buyer of the U.S. dollar rather than jump in with everybody else in the crowded ship that is seeing the U.S. dollar go down.
The Canadian dollar was below 69 cents in March. It traded above 78.5 cents this week. That's a gain of nearly 14%. The loonie at a 2.5-year high against the U.S. buck. If forecasters see the U.S. dollar weaker next year, what do you see for the Canadian dollar?
The Canadian dollar has been the flip side of the U.S. dollar. There's that. That is one of the contributing factors to the value of the Canadian dollar is how well the U.S. dollar is doing generally against other currencies. So when the U.S. dollar is in a bearish phase, like it's been since March of this year, it's not a surprise that Canada is in a bullish phase. The other big thing that moves the Canadian dollar, and this is over time, not so much day to day, is the commodity market. And the commodity market got hit pretty hard. You remember back in the January of 16, for instance, we had crude oil collapse. Canadian dollar collapsed, tick for tick virtually with WTI. Same thing happened this year in March when the stock market dropped and the crude oil market dropped, the Canadian dollar dropped, and as they turned around in March and started to go the other way, Canada did the same thing. So how the U.S. dollar is doing, how commodities generally are doing are very important to Canada. The correlation from time to time here the past few months between the Canadian dollar and the S&P 500 contract, I sit in front of these screens hours of the day, and it's almost tick for tick. And then, of course, with all these correlations or relationships, you'll see something, and then, shortly thereafter, it'll stop working. Canada, right now, I think, it's had a great rally off the lows. It's at a 2.5-year high. I just kind of got through saying I haven't believed the U.S. dollar was going to get hit this hard. So I am trading Canada from the short side. I think Canada as a country has got, issues, political issues for sure. I mean, God bless us. I'm a Canadian. I'm grateful for everything we have here, but Canada is a backwater in terms of technology compared to the United States. If the commodity markets are going to boom, Canada is going to rally. I mean, if you were really bullish on commodities, and I wrote a paper for another website this week where I pointed out that the broad basket of commodities, the commodity index, is at a 100-year low relative to a basket like the S&P 500, a basket of stocks. And one of the reasons for that is, who needs commodities? All the money's going into stocks. But I think for people who have had have enjoyed the run to the upside, whether it's individuals or institutional accounts that have enjoyed this incredible run for certainly the past 11 or so years, but going back even 40 years, this incredible run up in prices in bonds and stocks, might want to reallocate some capital to the commodity market because just the spreads between those two markets is incredibly wide. And one of the ways to allocate capital to the commodity market would be to be a buyer of Canadian dollars. So that's not usually the time frame that I trade in, but I could understand when I see a big move going on and I don't know why. It may be something like that where what we call real money, as opposed to short-term speculators, is repositioning in the market.
We'll have more with Victor Adair on This Week in Money right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Victor Adair. Gold hit all-time highs in early August at just over $2,000, but then dropped nearly $300 into last month's lows. Prices have rallied back about $100. But do you think it's odd gold isn't much higher given the weakness of the U.S. dollar?
Yeah, yes, I do. And not only that, the negative interest rates are getting more deeply negative. And I'd say from the lows that gold had in, doing this off the top of my head, it was about October, September 2018 to the highs in August of this year, gold rallied about $800 during that time. And, I mean, you lay the charts together of the trend in negative interest rates, in other words, getting increasingly negative, and the trend in gold going up, the correlation was very, very strong. And here we have the past 6 weeks or so, negative interest rates becoming even more negative, and gold hasn't responded. U.S. dollar weaker, and gold hasn't responded, as you might expect. So you say, why? Well, not to be too kind about it, it's sort of like who needs gold? When you can, buy Tesla in the morning and sell it the afternoon and make all kinds of money. I know that sounds goofy, but I think that is part of the answer. On this show, for the past several months, I have repeatedly pointed out that the key to the gold market is the ETF market. We saw, again, I'm doing this off the top of my head, Jimmy, but it was something like 750 tons of gold were bought in the ETF market, and that was largely the American and European ETF market, and by far and away the American market was the biggest size. Between, I'm going to say the March lows and as we got into summertime, it was huge, and it was very important because at that same period of time, the major retail markets in China and India had just walked away from the gold market. So the gold price needed the ETF buying, and we got this $800 rally. Well, certainly over the last month, I mean, some of the folks that got into the gold market via the ETFs have been selling. You can see it in the reports that we get. So I think that's one of the reasons gold hasn't been going up as a U.S. dollar. And I want to say hasn't. It's up $100 from where it was a month ago. But, you know, you'd kind of think it would be at new all-time highs, well above $2,000 with the U.S. dollar as weak as it is, and with the increase in negative rates, or let's say it the other way around, negative rates getting even more negative, but it's not. So I'm thinking that's part of it. It's just that who needs gold in this kind of an environment? So there you go.
Copper prices have closed higher for the last 7 consecutive weeks and now are at nearly 8-year highs. Is this rally tied to the electric vehicle story, or is there a lot more to it, including China saying they expect to grow something like 10% next year?
I think you stole my thunder there.
I think
sorry. You're absolutely right. No, I think China has been, I think the recovery in China, okay, let's just put in parentheses, nobody trusts the numbers we get out of China. Okay, fine, let's leave that aside. But it seems as though the reports are, that their economy is booming relative to the rest of the world, that they stamped out the virus and Bob's your uncle. And they're taking commodities, whether it's copper or iron ore or crude oil or what have you, more than you might have thought. So sure, China, I think it's huge. I think they're back way faster than the market expected. And copper prices, what did you say we were up? I'm forgetting. I know I had it written down. I guess you didn't say that. Where is it? Copper. We're up about 20% in 6 weeks. And some of the leading copper stocks, like or metal mining stocks, Freeport McMoran up about 50%. Teck Resources here in Canada up more than 50%. Copper mining stocks have done very well. The electric story, certainly part of it. And then at a bigger level, what the street is calling the reflation trade. We got dumped into the hole here in March. Central banks have done what they've done. The governments are going to do what they're going to do, and we're going to have reflation. At least that's sort of the hope. So, and I think also copper and crude, and soybeans to some degree, the sort of 3 leaders of the commodity bull trend here. They've got the same kind of thinking, that is psychology, that's been driving the bull market in stocks. So copper probably is run too far too fast to go up 7 consecutive weeks without a week down. Looks like speculative fever there. I would say this, given the correlation with copper and the stock markets this past spring, if we saw some shudders go through the stock market, we'd probably see the copper market take a tumble. But on the other hand, there's this bigger picture story of commodities are really, really cheap relative to stocks, and that may be a big picture bid in that market.
WTI crude oil prices have also rallied for 7 consecutive weeks, topping $49. Prices have just been booming, but what do you think is going to happen going into the new year?
I think crude's gone up more than I would have thought as well. The world was consuming around 100 million barrels of oil a day in 2019. That dropped to about 90 million barrels a day this spring. A 10% drop is really punched a hole in the crude oil market. Time and time again on this show, I talked about the main story in crude was it's a lack of demand. Everybody was focused on the supply side of the market. And I'm not saying I'm the genius, but I just was saying, maybe to be the opposite side guy. Look at the demand story. Well, demand has come back, but we're still, let's say the forecasts are maybe 96 million barrels of oil a day next year. and there's different forecasts from the EIA or the OPEC or what have you. But the loss was mostly in transportation fuel. And you can read, airplanes is huge in that, cars, trucks, and so on. I think WTI, like a lot of the other markets, has bought into this reflation story. And part of the way to see the reflation story is analysts are telling their clients, yeah, we know there's troubles right now. Yeah, we know there's going to be more business failures. There's probably going to be more people lose their jobs, and they're never going to get back to work again because they're out of the workforce, and there's a lot of horrible stuff going on. We see that. But look past that. Look out to next year, and things are going to be terrific. And so that's the justification, in a way, for, buying stocks, buying crude, buying copper, whatever, selling the U.S. dollar short. It's all kind of that same psychology of, look past the near-term troubles and see a much better future. Like demand, pent-up demand is just going to come roaring back. It might. Again, I know I sound skeptical because I kind of think it's groupthink. But, for crude oil to have run up the way it has here, from, I guess, we're around $33 to just about $50. That's a huge move, nearly 50% in 7 weeks. I think it's got ahead of itself.
Victor, kind of a big change for you this year. You switched from your Polar Futures Group website to your own personal website, victoradair.ca, when you retired from the brokerage business. You've been posting your weekly trading desk notes on your site, as well as lots of other information. How's it going, and what are your expectations for your new site?
Well, to be honest, Jimmy, setting up a new website was way more difficult than I thought it would be. I set up some websites back in the earlier days, and it didn't seem to be that complicated. Or maybe it's just tougher to teach an old dog new tricks with having to try to. Maybe it's more sophisticated now. I have to integrate a few different software programs with each other to actually get what I want up on my website. So that's been, and I already have a full-time job, trading. I'm up at 5 o'clock in the morning at least on the West Coast, and I'm doing homework here till 9 o'clock at night before I go to bed. So I don't know. It took more time and more of my attention to get the site up and going, but I stuck it out. And I know my golden rule sort of was that it was going to be a work in progress, that nothing was fixed. I'm just going to try this. Like when I was working at Pacific International, I keep saying that's the old way, at PI Financial, my anything I wrote on the website had to be approved, by the compliance department first. And that's fair. I understand that. I was in the business for years. But now, I could say anything I want, I suppose, on my website. And that's a kind of a blessing, but also, sobering at the same time. So, yeah, you could, but you want to be one of those crazy idiots out there that people, you think you're some sort of a conspiracy nut. What I wanted to do with the site, I guess, first of all, I thought, hell, I'm trading all the time, paying attention to markets. I've been doing this for years and years. I do like to write about things and if I write down what I'm thinking, I think it actually clears my thinking a little bit. Anyway, my intention has been, and it will be going forward, to put stuff up on my website, and the readers might get an idea. Somebody, we get the Google Analytics, and I see I've got people from all over the world look at my website, and that's kind of neat all by itself. And maybe there's some guy in Switzerland who's reading my website, and he goes, "Oh, that's a good idea. I could, I think he's dead wrong about that, but if I fade him, I can make some money." Whatever. That's kind of the intention, is to share some of my experiences from the trading I do, some things I think I see in the market, and kind of talk about that. I have a network of traders that I talk to and stay in touch with, swap emails with, swap research with. I kind of have my finger on the pulse of some things, and so I kind of put it out there, and I hope some of those guys, whether they're in Switzerland or Thailand or Japan or wherever, will go, oh, yeah, that's a neat idea. I could see how I could make some money off that idea. So that's my plan.
Victor, all the best for you and your family.
Well, thank you, Jim, and you too. I always enjoy doing these interviews, and I know they're probably a bit, whatever you could say, spontaneous, but it's sort of fun, and I hope your listeners also maybe get an idea or two from what we talk about that helps them trade or invest better.
My guest has been Victor Adair. He was the co-founder of the Polar Futures Group. He recently retired after nearly 50 years of being in the brokerage business in BC. Check out his website, victoradair.ca. Coming up, John Rubino, next on This Week in Money.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome back to the show, John.
Hey, Jim.
John, can you tell us a bit about dollarcollapse.com?
Well, sure. Dollar Collapse is a blog, news aggregation site that covers the dark side of the financial world. In other words, all the ways we're screwing up and all the consequences that are liable to flow from our screw-ups, investment-wise and politically, et cetera, et cetera. And I've got a button that you can click on and add your email address to join the mailing list, and then you'll get everything I do for free. And we don't sell our mailing list or anything here, so you won't be bothered by spam emails or anything because of this.
John, there's a contested election in the U.S. What are we likely to see in the markets and the economy under a continued Trump presidency versus a Biden presidency?
Well, I think at this point the odds of a Trump presidency are pretty slim. My theory is that the Republicans are setting up for the next election, in other words, for the congressional midterms, by creating a narrative in which this election was stolen from them. And I'm not saying that it wasn't. I have no idea. And I'm sure they're going to uncover a lot of legitimate cheating because the Democrats always cheat. And so do the Republicans. I mean, they cheat in different ways, but they both cheat. So when you look into their activities, you find stuff. And that doesn't mean that it was the determining factor in any given election. But the Republicans will find cheating. And they'll be able to go into the next election saying, you know what, the Democrats stole the last election from us, and so we need a turnout that gives us a landslide victory that is so big that the Democrats can't steal the next one. And that's going to be a really compelling message going into the next election. So they're looking ahead, I think. So going forward in the U.S., we more than likely have Biden as the president. And then the big question is who has the Senate, because there are two more elections still to be held for Senate seats. And if the Republicans win at least one of those two, then they're going to control the Senate and we'll have a divided government. If the Democrats win both seats, it'll be a Democrat sweep. They will control the entire government and they'll get to do whatever they want. So taking that one first as a possibility, they'll bail out everybody inside. Starting with all the mismanaged state and local governments out there, most of which are run by Democrats, and the main beneficiaries of which are public sector workers. And that's the biggest single constituency for the Democrat Party, so they are going to, they'll throw trillions of dollars at Illinois and California and New York and Connecticut to keep them from having to lay off their workers and generally, default on their bonds and send their people back to third world status. And then the Democrats will bail out pretty much everybody else after they get done with states and localities.
So student loans, a lot of other people, a lot of indebted people will get bailed out thanks to the Democrats. The Republicans, on the other hand, if they're in charge of the Senate, will at least slow down the process. They won't want to bail out a bunch of Democrat constituencies, so they'll drag their feet. It'll be harder to get a bailout through. In which case, the stock market will collapse, because the stock market is an addict that requires ever-increasing amounts of new credit. And if you threaten to cut off the flow of that credit, then everybody sells stocks, the market tanks, and we start looking at a 1930s style deflationary depression when the stock market crash bleeds over into every other indebted section of the country. And then when that happens, when the stock market tanks, the Republicans will get on board. They will cave, and then we'll get our big bailout. So the question is, will we get big bailouts in January, or will we have to wait till maybe the fall of 2021 to get gigantic bailouts? Either way, massive bailouts coming, with all that implies for the currency markets and for stocks and bonds, et cetera, et cetera.
Are we heading towards stagflation?
Yeah, very possibly, because there are a lot of sectors of the economy that just aren't going to snap back from the COVID-19 lockdowns, like the restaurant industry, for instance. And because of that, we're going to have at least pockets and probably widespread very slow economic growth coming out of this. No matter what the Fed says about 5% growth next year, it's going to be tough to achieve. At the same time, all this new money that we're creating is going to slosh around in the economy, and it has to go somewhere. So it's going to go into sectors where the prices will rise, and it could be that people start to actually notice prices rising this time around, because they haven't noticed stocks and bonds and real estate going through the roof as signs of inflation in the past. But let that bleed over into industrial commodities, which are now rising dramatically. And which themselves determine the prices of the stuff that they go into. So we could see more broad-based price increases in the coming year, which consumers understand as inflation, and then people might start acting accordingly. We might start having that at long last that tsunami of money flowing into inflation hedges and other kinds of real assets. So basically, to put this in more general terms, 2021 is a year of decision, because we've created a situation where dozens of different groups and entities and constituencies all need to be bailed out. And the government is going to have to do it, but with money that's just unprecedented other than 2020. We're going to have to borrow as much money next year and create as much new currency as we did this year. And, this year the U.S. ran a budget deficit of 10% of GDP and increased the money supply by 22%. We're going to have to do the same thing next year. And the dollar collapse thesis was always that eventually, the amplitude of these booms and busts get bigger and bigger. We're going to be confronted by a bust that is so huge, it's going to force the government to bail everybody out in sight, and the amount of money that it will take to do that will shift the pressure over to the currency markets, and we'll start seeing a fall in the value of the dollar and the euro and the yen, because everybody else has the same problem that we do. And that, if it goes on long enough and it isn't short-circuited somehow, will be the death knell of the fiat currency fractional reserve banking system that we set up in 1971 when the world broke all the remaining links to gold. And so finally, maybe this thing is going to end, and we'll have to have the monetary reset that has been out there and inevitable for a long time. Maybe the COVID lockdowns have made it imminent now. We'll have to see, but I think there's a good chance 2021 is the year that all this comes to a head.
Do authoritarian governments lead to civil unrest?
I think civil unrest leads to authoritarian governments, because we're screwing up our finances in a way that also screws up our politics. And it's creating immense inequality in this country. The rich are getting richer through all this because they benefit from the kinds of monetary and fiscal policies that governments pursue when they're trying to stave off the depression. So the rich keep getting richer. Everybody else finds themselves going backwards instead of forwards, and they get more and more angry, and then they hit the street, So we're looking at some kind of a French Revolution-ish situation if the economy doesn't pick back up, but rich people keep getting richer from negative interest rates and soaring stocks and et cetera, all the stuff that made them rich in the past, could be turbocharged if we create another 22% increase in the money supply, because the money has to go somewhere, and it'll go into hot things like stocks and real estate. And then, when you've got people burning down inner cities and things like that, the downtowns of their cities, that's an excuse for the government to step in, historically, always and everywhere, and declare some kind of martial law / authoritarian regime. So I think that's a big danger going forward. As the finances of the big countries of the world get so screwed up, if people hit the streets, governments are going to be tempted to step in and just put a lid on it by force. And then you get an authoritarian system, which is very hard to get out of, when it's this deeply indebted, because, we still have to get rid of this debt somehow. And you can't do that without immense pain for a lot of people. So we have to figure out how to allocate the pain in a way that doesn't lead to global insurrection. And I'm not sure we're going to have a good way that we can come up with in time.
Could the U.S. become balkanized due to the political divide?
Oh yeah, we're already headed that way fast. Everybody lives in their own little ideological bubble now. I've been, lamenting this with some friends lately, how, people who watch MSNBC only hear what's on MSNBC, and people who spend time with Fox only hear that. And they get used to hearing and saying outrageously offensive things about the other side. So when they're confronted with somebody who disagrees with them, even in a mild way, they just go straight to, oh my God, you must have drank the Kool-Aid, you must be one of those, blah, 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 that kind of thing right away, where they start questioning your character. And, that's not conducive to cooperation and compromise of the type that you need in a democratic society, where you got to give up a little bit, you got to respect the humanity of the people on the other side. We're beyond that now. So you could easily see the civil unrest that we saw in 2020 becoming even more severe next year. And by the way, Americans are buying guns at record rates right now, so we've got an armed populace. A more heavily armed populace, and these riots and demonstrations and counter demonstrations could easily turn into firefights in that kind of a situation. So yeah, we don't know how to talk to each other anymore. It's getting harder and harder for one group to recognize the humanity of the people who disagree with them, and that's a prelude to something that can be physical and violent, Civil War-ish. And I hate to see it happening, but it's definitely headed in that direction.
I don't hear anyone like John Wayne out there. I think he was quoted as saying, I may disagree with what you say, but I'll fight to the death to defend your right to say it.
Oh, yeah, there's nothing like that. Now it's, I will have you put in jail if you say something I disagree with. The exact opposite of the old free speech advocate back in the day. Back when back when civil rights lawyers would defend Nazis' right to have a parade down the street of a town that includes a lot of Holocaust survivors. That actually happened. The Civil Liberties Union actually was on that side of that case. Those days are long gone now. Everybody, even people who used to be on the extreme side of civil liberties are now saying, "Oh no, you can't. You can't speak out on this issue because it's hate speech, and we have a right not to be offended. Therefore, you are committing a crime by speaking in this way." I forget which country in Europe it is, but they actually they criminalize dinner table conversation now. If you say something that they deem as hateful, at the family dinner, it's expected that the other members of the family will turn you in and testify against you, and then either have you fined or thrown in prison. That's how different things are now. And obviously, that just leads people to say more and more outrageous things, right? Because if someone tells you you can't say something, what do you want to do? You want to say it. You want to find a place where you can say it. And so in the U.S., we're seeing a lot of new social media platforms spring up where there is no censorship because people are so frustrated at being censored on Twitter and Facebook and Instagram. So we're balkanizing ourselves even further by doing that, where you've got all the right-wing people on these new media platforms, and you've got all the left-wing people on the old social media platform. And they're watching different news shows, they're reading different publications, and so they literally never hear each other's views, maybe until they meet in the street when they're yelling at each other. That's the first time they hear a conflicting opinion. And Jim, this can't end well. I really just hate where this is going, but it is definitely going that way.
Is the value of the U.S. dollar important for the U.S. economy?
Oh, it's the only thing propping us up now. If we didn't have a dollar that everybody else in the world thought was valuable, we would crash and burn in a heartbeat here. Because we spend about a third more than we make, than the wealth we create each year. So if we had to live within our means because people didn't want any more of our currency, everybody's lifestyle would just crater. I mean, we wouldn't have the health care that we have now, such as it is. Our houses wouldn't be affordable. We wouldn't have these big old pickup trucks every 3 years, and you name the thing that Americans do that offends the rest of the world in terms of consumption, and we wouldn't be able to do it anymore. So we would just crash and burn. And that's all that's standing in the way of that is the fact that the dollar is strong. But, you may have noticed in the last few months, the dollar has been starting to roll over a bit. It's down about 10% now. The dollar index, which is how we measure the dollar versus even the other crappy currencies in the world, is down 10%, and falling. It's not showing any signs of stabilizing at all. So let that steady decline turn into something that is harder to manage, more precipitous. Then we could easily see a currency crisis here where the dollar just, gets sold by everybody out there, and it kind of falls off the table, and our interest rates kind of sort of have to go up, because who wants to own a long-term debt instrument that is denominated in a currency that's falling at an increasing rate? And then it's basically game over, because we have no tools with which to stop interest rates from rising if everybody else wants interest rates to rise. The only way we could stop that is by issuing a lot of new dollars in order to buy bonds to push down their rates. But if nobody will take those dollars, we can't do it. So we've got this really disorderly kind of discontinuity coming if it goes that way. And I would put the odds at 30% of that happening in the next couple of years. And I might be conservative here because we've already got the dollar falling. We're taking on absolutely unprecedented amounts of new debt and creating unprecedented amounts of new currency, which is saying something for a country as profligate as that. So, we've created the conditions in which we have a really disorderly decline in the currency. And I'm not, predicting that it happens right away, but we've created the conditions in which it could totally happen soon.
We'll have more with John Rubino when This Week in Money returns.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with John Rubino. John, the Dow has broken the 30,000 mark, something people said just a couple of years ago could not happen. Where do you think the Dow can go from here?
Well, let me start by saying, you know what, I kind of started shorting this market when the Dow was 10,000. So my credibility when it comes to the proper level for U.S. stocks is pretty weak at this point. But, now U.S. stocks are as richly valued as they have ever been by a lot of measures. And that includes the, Roaring 20s, 1929 stock market. That includes the 1999 tech stock bubble market. And that includes the 2006-2007 housing bubble market. Stocks are more expensive than they were in any of those times by some measures. And it's more expensive. Stocks are more expensive by most measures than any of those times completely. So, after each of those times, there was a horrific stock market crash. So the question is, are circumstances so different from all of those past eras that we can keep going up from here and becoming more and more richly valued from here? Or is there something about these levels that make it impossible for stocks to keep on going up? And we'll find out. We're going to create a tremendous amount of new currency next year. And that some of that money, at least, is going to flow into equities because that's how it always works. So that's upward pressure on stocks. And then, leaning against that, you've got possible disorderly markets in currencies and maybe in real estate. And the fact that who in their right mind would be buying stocks now unless they were operating on the greater fool theory, where we're creating so much money that some idiot who comes into a lot of that money is going to buy your Google stock from you at 50% more than it is today. But it is an idiot. We got to be clear about that. We're talking about really, really dumb money, and it could happen. Dumb money does amazing things. But history. There's never been a time when stocks were this expensive without a crash following shortly. So, I don't know. I'm very comfortable shorting this market, but it hasn't worked yet. I think sometime in the next couple of years, with long-dated options, you've got a really good chance of quintupling your money when the stock market really tanks. But there are no guarantees in a world where we're creating this amount of new currency and just dumping it into the market.
Gold hit new highs in 2020. Could it see new higher highs in 2021?
Well, yeah, gold is the logical beneficiary of what's happening right now because, for 5,000 years or 3,000 years, depending on where you start your observations, gold has done great during times of stress and chaos because it's the kind of money that governments can't make more of. And that the fact that it's rare, we get about 1 or 2% more gold each year out of gold mines. It has a limited increase in supply, which allows it to hold its value, which means it's where you hide out when other things you used to count on are losing their value. And, basic supply and demand in terms of the dollar, we're creating so many of them that you would expect each individual dollar to lose value. And if that happens, then people who hold dollars now are not going to want to hold as many, and they're going to look around for where else to be, and gold is always one of the places. Every single time, without exception in human history, through, revolutions and natural disasters and wars and depressions, you name it, gold has done just fine. It's held its value, it's preserved purchasing power. So you would expect that to happen again. And it's already going up somewhat. It's gone from $1,200 an ounce U.S. to, what is it today? Going on $1,900. So it's doing its job, and the crazier things get, the more extreme the moves in the gold price we should expect.
Silver got to $30 in 2020. Could it revisit its old $50 highs in 2021?
Well, the question is, why didn't silver go to 50 when gold went to 2,000 this year? And I don't know the answer to that, but I think that silver is probably the most interesting story in the world right now. And the reason for that is that with Democrats taking over in the U.S., one of their favorite policy ideas is to increase spending on alternative energy and other kinds of clean tech. And silver is used in solar panels and electric cars and most other things that you would class as clean tech. So silver has an industrial clean energy play story that is independent of its monetary metal story, and that alone could make it a really good investment because there isn't that much silver out there. It's already used in a lot of electronics and other products, and not recycled out of all of them. So the amount of silver that is available in the world isn't soaring or anything. We get a certain amount each year from mines, and we pretty much use it in electronics and other things, and then it's just gone, not available for investors to buy. So if you've got a lot of new clean tech demand out there at the same time that investors start to pick up on silver as a monetary metal, then you've got the potential for a perfect storm. A little tiny, thinly traded market where solar panel guys really need it and investors really want it. And there's just not that much out there, so you could see the price just rocket. And I'm talking triple digits in U.S. dollars. In other words, we could see $100 silver in this cycle very easily. And, based on what Bitcoin has done a few times in its lifetime, where it's a thinly traded market that, a handful of buyers send the thing up, by like 10 times. Well, if that kind of a dynamic takes hold in silver, then we could see $200 or $300 an ounce, and that would just be silver imitating Bitcoin, with which it shares a lot of characteristics. So, I think silver is a very exciting play right now. And then the mining stock, the handful of companies that get most of their revenue from mining silver could just be lottery tickets. It could just be spectacular when silver really gets going.
How is the gold-silver ratio looking?
Well, the gold-silver ratio, that's how many ounces of silver it takes to buy an ounce of gold, basically. And it has traded within a range for most of the last century. But this year, it's spiked out of its normal range. Normal range has a high end of 80 or 90. In other words, 90 ounces of silver to buy an ounce of gold. Well, it went up to about 125 at one point. And people who understood the history were saying, man, you have to be buying silver now because look at that. Never been this cheap relative to gold. And sure enough, silver went up faster than gold in the subsequent months. And now the gold-silver ratio is somewhere around 70. Maybe 75, which is still at the high end of the historical range. So you could easily see silver outperform gold for a while longer here until the ratio gets to 30 or 40, which means silver would double relative to gold. Which that alone takes you up to $50 US, right? Gold doesn't have to go anywhere if the gold-silver ratio is cut in half here for silver to hit $50 an ounce. So I think the relationship between gold and silver still favors silver, and it should continue to do so until silver gets down into, let's say, the 30s relative to gold. At that point, you want to start lightening up. But until then, silver is a good thing to own, even relative to gold, although gold is a good thing to own, too.
How are the gold miners looking as we end 2020?
They're looking great because they are just generating tons of cash with gold at this price. Same thing with the silver miners. They're both just throwing off tons of cash, which means two really interesting things going forward. Well, actually, three. One is they're going to report excellent earnings comparisons, which is good for their stock price. When you double your earnings year over year, people tend to buy your stock just because that's an exciting story. Second thing is, with all the cash they've got coming in, they're going to raise their dividends, which means the big gold and silver miners are going to be dividend plays for the first time in a really long time. So that's a whole separate part of the investment community that are going to be noticing these guys. There's speculation that that's why Warren Buffett bought some of Barrick Gold, because he expected good dividends from it. And the third thing is, the money they're not paying out in dividends, these big gold miners will use for acquisitions, because they, by their nature, gold mining companies shrink every year. When they pull gold out of the ground and sell it, that means they own less gold, so they're a smaller company. And they can't let that go on for too long, so they're going to start buying up the junior miners that have really attractive properties, which means the real action, I mean, you know, the action in the big miners will be good, but the real extreme action, the really fun stuff, is going to happen in the junior miner space, where exploration companies and small producers are going to see bidding wars from the big guys. You know, there's one that I'm watching that's you know, Canadian company. It's in a great jurisdiction. It just has an extraordinary deposit that it's outlining, and there's speculation now that once they actually release the resource, in other words, they show the world a study that shows how much they've got and what the economics of the blah, 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 and that some of the big guys will step in, and there might be more than one. So you could have a bidding war where Newmont offers this and Barrick tops it with that, and it goes back and forth, and that'll be fun. But that won't be the only company where it happens. You know, once that happens, everybody's going to start looking around for the next one, and they'll find some. You know, they'll find some junior miners with really good prospects and therefore good takeover candidacy, and they will be, you know, like lottery tickets. I'm reusing that term, I know, but you know, a lot of these guys are going to behave that way, where the price goes up 5 or 10 times while this plays out, and they're going to be fun to own.
The silver miners seem to be more volatile. How are they looking?
Well, they look great, but you're right, they are much more volatile because silver is more volatile. See, the miners tend to move in more extreme ways than the underlying metal. And if the underlying metal is more volatile, then the miners move in a more volatile way. So, yeah, you know, and the other thing is there aren't that many primary silver producers out there. So they're going to be a very rare commodity conceptually, as well as in terms of what they've got in the ground. So you'll see a lot of interest in them. And their prices are liable to get to points where, you know, for people who have been watching them for a while, seem just ridiculous. You know, a lot of these things could be expensive beyond rationality at some point, which is where you and I want to be selling, Jim. We want to be selling to the people who are willing to pay anything to get them.
When you're looking at a junior mining stock, do you look at management before looking at the project?
You know, the smartest investors look at management. And I got to say, being, you know, a little bit emotional, I tend to look at the project. You know, if I see good drill results, that's what gets my attention most. But I think anybody who wants to be rational about getting into junior miners starts with a management team that has already done it a couple of times. You know, if these guys have brought a hole in the ground into the status of a viable junior miner and then sold it for a big profit, there's a higher than average chance that they can do it again. So you want to start with those guys because they're going to be generating the bulk of the winners in that sector. And they also have access to more financing than some no-name management team, so they can weather hard times more easily. So anyhow, you want to start with that, I think, even though I don't do it that way, you know. So do what I say, not what I do. Yeah, you know, if you just align yourself with the smartest guys in that space, you will tend to do well compared to the less smart guy.
Are we likely to see more mergers in the gold and silver space in 2021?
Yeah, we really are. That's going to be one of the big stories going forward. So, a really interesting portfolio in the junior mining space would be one of takeover candidates. You know, you look into the ones that are in good jurisdictions. You know, Canada is an excellent jurisdiction. So if you know, or the U.S. less so, but still not bad. So you want to find somebody like that, and then somebody that's finding lots of new metal who are expanding their project to the size that might move the needle for Newmont. You know, because they don't really bother with small properties because it doesn't make any difference to their bottom line if it succeeds or fails. They want something that, you know, that makes a noticeable difference 2 years hence that they can talk about in their annual meeting and say, you know what, I bought that and already it's generating, you know, $500 million worth of cash flow in a sustainable way. You know, they want to be able to say stuff like that. So you look for projects that fit that profile, that are growing and that haven't been defined yet. They haven't found the edge of their deposit, and they're still expanding it. And something like that may become attractive to the big guys. And so you want a portfolio of companies like that.
Is this tax loss season for the miners a good buying opportunity?
Oh, it always is. This year may be less so than before, although the correction in the last couple of months has helped. Because, a lot of these miners were way up in, say, September. So there's nobody going to take tax losses in something that has tripled from its bottom in the bear market in March. So you wouldn't have seen a lot of tax loss selling if stocks had stayed where they were in September or October, but they've gone down since then. So the people who bought just lately in a lot of these stocks now have tax losses, and there's a good chance of them selling a lot. Like Novo Resources is a good example if you want to look them up. They've just gotten smacked lately. And the one explanation for that is that there's tax loss selling going on right now because the stock is down. If you are able to understand a company well enough to judge the viability of their business, and that's a big if for a lot of people, but if you're reasonably sure that it's a good company that's going to stick around, and the stock gets whacked in late December, then you can reasonably infer that that's tax loss selling, and that if you buy it in really late December or early January, you're getting in at a good spot. So there are people like Marin Katusa is a good example of this. He likes to play tax loss selling and claims to have made a lot of money doing it, which is very believable because it is a cycle that you can see on the charts of a lot of these companies. The little guys, they tend to go down if they weren't way up during the year. They tend to go down towards the end of the year. And you buy them in January and you make money just because of that, not because of any operational issue at all. So, yeah, it makes a difference, tax loss selling, and this year is no exception.
Are there other sectors you're keeping a close watch on?
I just bought my first ever Bitcoin this year. So the cryptos are interesting, and I just went on Max Kaiser's show, and he explained after the show was over why you only want Bitcoin, you don't want any of the other cryptos. And I'm going to have to research that to see if I end up agreeing with it, but it does make sense because Bitcoin is kind of sucking all the oxygen out of the crypto market, at least in terms of news reporting, So with first mover advantage and some technological advantages, you may as well own the big guy, just like buying Amazon versus a lot of the other e-commerce companies at any given time in Amazon's existence. You've always wanted to own Amazon. So Bitcoin might be like that. But it's also possible that there's some other cryptos that are interesting buys. I don't know enough yet to have an opinion, but I'm going to start looking into it. And I think the fact that the Democrats are going to be at least partially and possibly completely in control of our government means clean tech, like we talked about with silver as a component of solar panels and things like that. Well, American-made clean tech might be a very interesting thing going forward. In other words, the things that go into electric car batteries might be growth industries, and the components of solar panels beyond the solar panels themselves might be very valuable going forward. So there are a lot of things in clean tech that you can look at that would be really interesting. Water technology. Doesn't sound very exciting, but something like 1 billion people don't have clean drinking water right now. So a technology that can fix that will be astounding. If it becomes cheap enough to be deployed around the world, you want to look at that too. So there are a lot of things out there that are interesting. But I got to say, like we talked about earlier, the stock market itself is so richly valued that anything, and I'm including gold and silver mining stocks in this, could just get swept down along with the big, super expensive stocks now. If we have a bear market, which we really ought to based on history, I don't think anything comes through that unscathed. So it's possible that everything we're talking about right now is not actually a buy, but will be a screaming buy when stocks drop by 30 or 40% and the government just opens the monetary floodgates. So keep some powder dry with which to buy gold mining stocks, for instance, if they get whacked like they did earlier this year. They might go on sale for a third or a half off. These really good mining companies that are going to be around forever, and they'll be making gold, which is always going to be valuable. So if you can buy them half off, great deal. That's a very real possibility. So the things that I'm watching are basically precious metals, of course, cryptos early on, clean tech, and then shorting. If you watch the movie The Big Short, you know that every once in a while something comes along that is life-changingly bad out there in the world. In other words, there's a business model that just doesn't work. There's an asset that's wildly overvalued. And if you bet against it, you make a ton of money. And I think, financial assets right now are in the category of overvalued. And at some point, they're going to be big short candidates. So anybody who's adventurous enough and well-versed in finance enough to have that sound exciting, you should definitely be paying attention and trying to figure out what to short. Because, fortunes were made by shorting the housing stocks and the banks just a decade ago. And fortunes will be made shorting government bonds and big tech and a handful of other things sometime in the next few years. But we have to figure out when that is, because you got to time this stuff pretty well, or else you lose your shirt before you make a lot of money, and then you're basically just making back your losses. So the timing is crucial, and I really don't know what the timing should be here yet.
John, how can people find out more about dollarcollapse.com?
Oh, just come on over. And, it's updated daily with all the news that I can find on the terrible things that are happening in the financial market. So the idea is show up, spend an hour or so there, and you're pretty much up to speed on the dark side of the financial world.
John, thank you so much for being on This Week in Money.
Sure thing, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. He was speaking to us from the Port Angeles area of Washington State. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Victor Adair, and John Rubino. And thank you for listening. We'd also like to thank our sponsors, American Manganese, Aben Resources, Engineer Gold Mines, and Gold Arrow Resources. If you have any questions for the show, you can send them to info@housestreet.com. Now stand by for a company showcase update from American Manganese President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HouseStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry, and best of the season.
Well, the best of the season to you, Jim.
You were busy again this week, letting the world know what's new at American Manganese. What did the news release have this time?
We were talking about getting our sampling program completed at the Wenden Stockpile in Arizona, and that's for the U.S. Defense Logistics Agency, the old Department of Defense, and boys did a very good job down there. It was monitored by the DLS, and even had a assistant from the congressman out there watching us do the work, so it was an exciting time for the boys down there. And we've got the samples all done up. They've been shipped, and, as the 3 days moves into the 10 days, we haven't received them yet. So I expect that to happen no later than Monday. So anyway, that's kind of the update there. We're real happy with the getting that funding out of the Defense Logistics Department, because that allows us to get our foot back in the door for a much larger deposit, a larger effort on the artillery peak ores that we have. We've basically, I guess, went through a pre-feasibility study on. But this program will take up just about a year, and 3/4 of a year, and I think we're going to do a good job for them. Certainly, it's not something that's new to us, and we know pretty much what our process will do, and that process was actually developed into the recycling. So that's tremendous. Recycling, we're still going ahead with that. We're building out the location of the capacitator, and because that has to have a clean environment, and that is underway right now. There's not going to be a lot of work done now till the new year. Next week will be the Christmas month, and after that will be New Year's, and so there's going to be a lack of staff everywhere. Although we will probably be in every day that the markets are open. And, talking about the markets, well, I see a lot of strength starting to return to the markets. I think maybe a Christmas rally is still possible next week. Santa Claus rally, I should say. So we're looking forward to that. We've been inching up in the volume, inching up in the price, which looks to me like an accumulation of our stock is going on, and that usually bodes good things for the company. So, that's kind of where we're at right now. Now, let me just think of something else I wanted to say, but I just ended up a meeting, so it's not like I came into this prepared. And we're looking at, the reality is I've talked about the shifting sands and the recycling for quite some time. Now we know what the Tier 1 companies want, or at least one Tier 1 company wants, and that's the capacitator entry into our program. But we're also looking at what else we're going to do. I see that predominantly in my mind, and some of our minds, is being a licensing agreement to a battery manufacturer, because we can't build one piece of equipment that'll satisfy every manufacturer, but we can build the equipment. And maybe the key location for our key location and aptitude of our processing plant will be more to produce the salts or the cathode metals individually, which there's a ready market for, and so we got to look at that. So we're gonna look at how we're going to shift the chairs around, and but it's an exciting time. We've always had a lot of excitement in what we're doing. There's news every week that can be reported on or talked about in a podcast. And one of the more interesting things I saw was that during a recent review, 71% of the population of the U.S. prefers to have an electric vehicle. That's huge. And you're seeing that multi-billions of dollars are being spent, hundreds of billions of dollars are being spent on battery manufacturing, and very little is going into the recycling, but that's shifting as we speak. We know that we know that we're up close to 100% recoveries and purities, and which is the reason we get a lot of attention from battery manufacturers, EV car manufacturers, and we've got all kinds of NDAs with them. I'd like to be able to announce who we're talking to. I think it would give a bit of excitement to what we're doing, but these guys make us sign an NDA where we can't make it public that we're doing work for them or that individual company. We can make it public we're doing work for a battery manufacturer, but we can't name the manufacturer. That all said and done, I think we're coming into a tremendous year. I still stand by the fact that we're coming into a very powerful bull market, and I'm looking at the price of commodities. Commodities are way up. Dr. Copper is trading at close to 362 this morning. So 362, new 7-8 year highs for copper. Gold is, and gold always does that. Gold is still, up, down, but I see that gold, for obvious reasons, will be a huge bull market, and that's the printing of money is inflationary, and gold thrives during times of inflation, as all commodities do. And, I went through that in 1980 when oil and gas and everything else on the board was just going nuts. Even more so then than it has been lately. You're getting companies that announce bankruptcies and are tripling in value the next day. That tells you a different type of investor is after those. And it's an exciting time for us. So so all we can do is just keep trucking along 1 foot at a time, and looking at ways to maximize our value. And certainly, I've been around long enough to know that there's probably, I know about 90% of the ways to maximize value, but a lot of those ways have fallen by the wayside, such as transparency in what we're doing, which was key at one time. And it doesn't seem like the market wants to pay attention to that. They just want to hear that somebody's building a recycling plant, and away it goes. But that's kind of all I got to say. I'm sorry, I just had a few other things prepared, but I think I'll just pass those up till next week and move on. We've had guys coming in from the outside and meetings here this morning that have eaten away the time. So, Jim, I wish everybody a Merry Christmas and a Happy New Year.
Larry, for people new to American Manganese, what's the company all about?
American Manganese is a critical metals company that is moving on 3 fronts right now. The first one is our recycling. Second one is our manganese project. And the third one is our spin-out. And all of these things evolved from the initial manganese project that we had, except for the spin-out, which has got some nice copper and gold projects in them, very high grades from an old mine. And so I can't wait to next summer to be in there drilling that property, the new spin-out. So you can find anything you want out about us at our website, AmericanManganeseInc.com. You can phone the company, 778-574-4444, or you can email me at LREAUGH@AMYMN.com. We trade on the Toronto Venture Exchange under the symbol AMY. We trade on the U.S. market under the symbol AMYZF, and we trade in Frankfurt under the symbol 2AM.
Larry, thank you so much for the update, and best of the season.
Thank you.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on December 18th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.